Hello there, you're welcome to this week's edition of the Business Day Exclusive. My name is Lolade Akinrele, Deputy Editor at Business Day. Today with me, I have Egie Akpata, who's the chairman of Skymark Partners and a director at UCML Capital. We're going to be talking about a range of issues from the challenges in the Nigerian foreign exchange market, as well as expectations ahead of the Central Bank of Nigeria's MPC meeting, the first since Olayemi Cardoso was appointed governor last year. So the Monetary Policy Committee of the Central Bank of Nigeria will be holding its first meeting in February. The first meeting since Yemi Cardoso became governor. The last time they held a meeting was in July when they had to increase interest rates by 25 basis points to 18.75%. But since then, of course, inflation has surged and there's been considerable pressure on the naira. So I guess I want to ask you, what are your expectations, going into this meeting, especially in terms of interest rates direction?
Well, I think it's pretty obvious that interest rates have to go up. Inflation has moved up very substantially since the last time MPC met. Inflation is almost 30%. The question becomes, what magnitude of increase of interest rates should we expect? I think it's unlikely that we're going to get 500 basis points, as some people think. I probably think 125 to 20, maybe it goes to 20, 21% MPR. Unfortunately, the MPR rate is not as important as it sounds. And what is probably more important is the other administrative measures the central bank has been doing around treasury bills, OMO auctions, TRR. So what I would expect are the Q&A definitely of the MPC's specific information on how those administrative measures are going to be implemented, because they are more important to determining direction of market rates and also quenching inflation eventually. Yeah,
precisely. I agree with you that the MPR is not as important as it used to be, at least, because it's supposed to be the benchmark interest rates, but their rates, the yields on the one-year T-bill, for instance, is even below 18.75%. And 18.75% should be the floor, should be the benchmark for all the rates. So I agree with you that the MPR is not as important as it ought to be. But then, sir, so yes, inflation has surged. There's been pressure on the naira, even though we've seen a lot of effort on the part of the central bank, to see how to stabilize the FX market and get some dollars in. We had to deal with the Afrexim Bank. We also heard that there will be plans to tap the Eurobond market this year if interest rates decline. But there's still considerable pressure on the naira. We know by how much it has moved this year alone. It's like 1,004 now in the black market. And in the official market as well, there's been some considerable pressure there. What do you think the CBN is not doing right, or what is the CBN failing to do to restore investor confidence that would then lead to the type of significant dollar inflows that we're looking for that would help stabilize the naira?
Well, when you say stabilize the naira, it depends on which market you're looking at. If you're looking at the NAFEM market, the naira has been stable since the beginning of the year. Now, if you're looking at some other undocumented markets,
the more accessible markets.
Well, so it's that's first thing. But I think in reality, in a world where the last treasury bill auction on January 10 had the one-year discount at 8.3, and then your inflation is at 28 plus, you will have to have a devaluation of your currency if you have that kind of differential between interest rates and inflation. So the first thing they're going to have to fix is that differential. It doesn't necessarily mean that the one-year treasury bill rates should go above inflation, but it definitely has to be close to it. You can't be at 8-9% and then paying 28% inflation. And when we say treasury bill, we don't mean OMO, because OMO bills are restricted. Only foreign portfolio investors and banks can buy them. So they definitely have to move up the treasury bill rate, not MPR, the treasury bill rate. And the one-year treasury bill definitely has to be yielding well over 20% for it to have any impact on currency movements, because there's a lot of demand for dollars that is for a store of value. People are storing money in storing their wealth in dollars and not naira, because the returns on naira are very poor relative to its declining purchasing power. So that's one thing they can fix instantly. Unfortunately, you move up the T-bill rate and you increase borrowing costs for the government, and that's a dilemma that they have to fix. But I think that the solution on the short term, at least for a few months, maybe for 6 months, you need to have very high treasury bill rates to slow down the decline of naira's value.
So yes, you're right. The dilemma is really, so if you allow rates to go up, the impact it would have on government's debt servicing costs, especially given that last year about 90% of the federal government's revenues went into servicing debt. But I did hear you say there that it might just be a short-term fix. Can you expatiate on that? You said something like, so even if rates go up, they might not need to stay that high for so long.
Well, I think, okay, first thing is not only the government that will be affected by very high interest rates. I mean, the entire, borrowing community, corporate world will be badly affected by a hike of treasury bill rates to that level. But you have an emergency situation. And when you have an emergency, you have to administer emergency measures, and those emergency measures, I would think, include very high rates for a certain length of time to suppress some of these forces around inflation and people storing money in dollars. When you get that under control, then you have the luxury of being able to slow down or reduce those rates. Also, there are just base effect things that kick in terms of the way inflation is calculated. But I think that you cannot have a 1-year T-bill rate sub 10 and inflation at almost 30% and expect your currency to be stable. There's no known formula that allows that to happen, and there's nothing unique about Nigeria. We're seeing the same thing here.
Yes, sir. So you made a point about the currency being stable in the official market. How is that even possible? I mean, we know that it's not like we're saying. The fundamentals don't suggest that we should see that kind of stability in the NAFEM. What do you think is going on there? Why it hasn't moved as much as the rates in the parallel market, which is more accessible?
Well, again, you might want to ask those from people who actually run the NAFEM. I'm not familiar with the internal pricing dynamics of how things are reported. But what we know is that it's a very unique currency market. The level of movement, both intraday and closing prices day to day, are a bit wide for a currency. So it's a bit unusual for a currency to move that much. Particularly when there's limited supply, you would think the price will keep going up, but it refuses to move up. So there might be other mechanical things that I'm not aware of about how the market works that is making it behave the way it does.
Okay, so let's talk about the FX backlog now. I mean, that's also one main constraint, if you like, that foreign investors have said that, look, this is a big issue that is still restricting them from coming back into Nigeria, because they are wondering, how am I sure I can get my money out? I mean, so there are still people who have their money trapped in Nigeria. I think the finance minister put the figure at around $5 billion, during an interview at Davos. So how do you think we can go about clearing the backlog? What are there any creative? So I'll give you an example. Coco, for instance, Bola Onadele Coco, the CEO of FMDQ, made a suggestion that, look, rather than use the trickles of dollars you're getting from Afrexim, and the other loans, why don't you buy a 30-year US Treasury, zero coupon, for $5 billion, and then with a face value of $15 billion, and then you collateralize that, and then use that to borrow $15 billion today. And then, you can easily clear the backlog and then meet demand over time. I'd like to get your thoughts on that and what you think the central bank can do to clear this backlog that's been lingering for many years now.
Okay, I think the first thing we need to clarify is what exactly is this backlog? Because there's a huge difference between, overdue FX forward, which are contracts between the buyer who has already given central bank Naira and central bank that was supposed to deliver dollars at a certain rate at a certain point in time in the past. So those are contractual obligations that are very different from anybody that has Naira and is trying to leave Nigeria.
Of course. Right?
So we need to separate those two first. I suspect that what the finance minister was talking about is the FX forwards that are contractual obligations between central bank and counterparties who have paid. For everybody else, be it foreign or local, that has Naira in Nigeria and is trying to repatriate, they should do what everybody else does, which is, pay whatever the rate is to get out. Because if you have a problem holding Naira and you need to be in another currency, why would you wait around for 1-2 years and wait the currency keep devaluing? So it's not clear to me why some of those people are in that situation. Even in the NAFEM that does have a very wide trading range, when you look at intraday highs for a number of days, for a lot of days, the intraday highs are almost the same as the parallel market rates, suggesting that if you were desperate to get out of Nigeria, tell your bank to bid to whatever level is needed to get out. So when I hear people say that they're stuck in Nigeria and all that, I'm not sure what it means. Central bank has not sold any dollars since September 22. So the question is, how has the economy survived for 4 months without a single sale from central bank? Obviously, these businesses are surviving from somewhere else. Well, those people who are in the backlog or who are so-called trapped should go to the same place and get their dollars and leave Nigeria.
Fantastic. Okay, so let's talk a little bit about the Afrexim Bank loan now. I don't know if you've had time to look at the term sheet. What did you make of it? The structure of the deal?
Well, I mean, again, it's a private loan between an MPC and a consortium outside Nigeria. They've not published the signed documentation, so we don't know the exact final terms. But what is clear is that it's probably the most secure federal government paper you can get your hands on because of the collateral that is behind it. I mean, your federal government bond does not have that kind of collateral. It doesn't have any collateral, Naira bond. Even your foreign currency bond is not really collateralized. So this is over-collateralized, so it's extremely safe, instrument, and the pricing is generous. But
very generous.
But it's floating rate price. It's not fixed rates. So in 2 years' time, those rates could be substantially lower.
The 11% rate, you mean?
Yeah. Well, it's a margin over so far, and that margin is constant, but the benchmark is not constant. So it's not a fixed rate instrument, and the interest rate on that instrument could drop substantially over the next 5 years. But again, without having the final documentation, it's kind of hard to say anything specific about it. But if Nigerian government is ready to provide collateral to borrow, that kind of collateral, there are probably many people who will give the same or better terms than what they got.
Okay. So as my final question now, it's what's your outlook for the economy in 2024, the Nigerian economy?
Well, in terms of GDP growth, again, the GDP just seems to keep growing without the right environment in place. So we'll always expect we will not have negative growth. I think that's clear. In terms of the interest rates, a lot depends on the philosophy of this new central bank team, because we've not heard from them directly. But I assume that their philosophy will be to make rates higher for now until they see inflation come down. So I expect rates to trend up at least for the next 6 months or so. In terms of the exchange rates, it's linked to the interest rates. If the interest rate doesn't get high enough, the exchange rates will just mathematically have to get weaker. There's no way around it. There's nothing unique about Nigeria and how these variables work. So you can't have a high inflation rate and a low interest rate. You will not have a stable currency. Your currency will depreciate. Yeah. So I think those ones are clear. Overall, I mean, anytime you have a change in government, it's normally a positive psychological boost for the market. You've seen the performance of Nigerian Stock Exchange in the past.
More than 22% year to date.
Yeah, I mean, year to date might be a bit tricky because there's some very, very, very large companies that have moved substantially. So that return is not widely distributed. But if you look at the past, 7 months, it's pretty clear that virtually all stocks are substantially higher now than 7 months ago. And when you bear in mind that the stock market is a forward-looking barometer, then it means that there's probably optimism out there that this year will probably be a better year than the recent past.
So what do you make of Dangote Cement crossing the 10 trillion naira mark? The first company to do so.
Well, I mean, I think it's impressive. I think it's definitely a positive thing. But I'm sure if you check the US dollar equivalent, it's probably not as high as that's been in the past in US dollars. So it should give you an idea that despite the fact that the company's profits are substantially more than they were 8 years ago, but in real terms or US dollar terms, it probably is not at an all-time high. But it's definitely a positive signal for the rest of the markets.
That's an important point to keep in mind, really. All right, sir, thank you so much for your time. Thank you, sir.
Thank you.
That's it. I hope you enjoyed our conversation. Very insightful. Don't forget to follow us across our various social media platforms at BusinessDay NG. I remain your host, Lolade Akimrele. Till next time.